My name is Goldman. I'm the director and founder of Goldman & Associates. Our firm has a primary focus on family law issues here in Michigan. And today, we're going to talk about an interesting issue designed to educate the public, the issue about splitting the marital home in the divorce. So please subscribe to our channel. When we talk about splitting the marital home, what we're really talking about is we have a value in the home, an equity. How do we divide that equity? Now, sometimes you have to measure the equity because sometimes there's a mortgage and the bank owns a piece of it, so therefore the equity is really only what's left over. Sometimes there is no indebtedness associated with the house, but we don't agree on the value. We think the value may be $50,000 higher than the other side, or lower. Or maybe we're dealing with a fluctuating marketplace, a marketplace where the value is higher during certain times, where there may be very low inventory, or lower during times when there's extensive inventory. Either way, we've got to figure out how do we divide the marital home as part of the property division in the divorce. Well, we have a couple options. If we're in a situation where there's plenty of other assets, and let's say we have a marital home and it's got $200,000 equity, so somebody's staying and someone's going. The one who's staying has to pay half of that equity to the one that's going. That's $100,000. Where's it going to come from? So if we have other assets that we can use as a set-off, we can say, okay, I'm staying in the house. I owe you $100,000. I don't have $100,000, but the 401k plan has a split. I would have gotten $100,000 out of that. So you keep that, and I'll keep the house. In other words, we can barter certain assets against other assets. Another way to do it, another way to pay off the marital home is to say, look, I owe you money. I don't have the cash. I'll tell you what, we have a lot of debt. I'll take on your share of the debt in exchange for the money that I owe you. That kind of thing. That can work out. Another option is maybe the parties have decent credit. If they have decent credit and there's that much equity in the house, $200,000, let's say, following our example, maybe the person keeping the house can take out a line of credit or a home equity loan and borrow that $100,000 to give to the other side. That's a good option too, because that way the money can be paid back slowly over a 30-year period or whatever time, and the other person gets their money, and they may need their money. Why? They may need to buy another house. They may need to relocate, and they need that extra equity, and they can't wait for it. And I'll tell you something. If you guys can't work it out, if the parties cannot determine how that money's going to come, the court's in the liquidation business. They're certainly not going to let the marital house stay there and let the person keep it for 10 years until they can pay the other person back. They're going to say, you keep it, and within a reasonable amount of time, less than a year, maybe sometimes 90 days, you got to pay that person off. If not, the court's going to order it sold and the profit split. So therefore, it behooves the parties to work together to try and resolve the matter of the marital home. And like I said, a good way to do it is to either barter other assets against it, take on some of the debt in exchange for that, or take a home equity or another mortgage on the property to pay the other person off. If you have any questions about that, reach out. We'll be glad to help you out.